we're now excited to introduce Paul Raymond, the CEO of Alithya. Paul, our thanks to you and welcome, and I'll pass it on.
Thanks, Amr. All right, well, good afternoon, everybody. Very happy to be here with you today to talk about Alithya. So Alithya today, we're over 2,200 people, Canada, US, Europe. Our revenues are about 50-50 Canada and outside of Canada, a bit more in Canada today. We really specialize in designing digital transformation solutions for customers. So we help them build a solution, we implement the solution, and we accompany them after the solution's been implemented. So our vision is very simple. We want to be seen as a trusted advisor, which means we need to be experts in the customer's business and also in the technology solutions that they need to implement in their businesses. We're very value-driven in terms of our people, our employee-based, our full-time employees. We have many different programs to make sure we attract and retain the best people in the business, and I'll talk about that a bit more. So, as soon as the page changes, there you go. So today, to give you more specifics, our services are divided into 4 buckets. The largest of which are enterprise solutions. These are all cloud-based enterprise solutions, and you can think about ERP, HCM, CRM, everything that a business needs to operate, basically from a back office perspective, running their inventory, running the business. It's the largest part. It's more than 50% of our revenues. All cloud-based. And again, this is really the application side that we work on. The other larger part of our business is really the custom approach to that, where a lot of customers have legacy applications that they want to move to the cloud, not too sure how to do it, but they do want to keep the functionality of the applications that they have today. So we do a lot of transformation type projects where we move stuff from legacy environments to cloud environments. Some of that is what we call lift and shift, but most of it is really transforming and adapting the applications to the cloud. Whereas lift and shift is more of an environmental issue, we look more on the application side. The 2 other parts of our business, one is upstream and one is more downstream. The upstream part is really the business strategy. So we actually do consulting on the business side to help our customers decide on what they want to do in terms of a solution. So how they're going to migrate to the cloud, what their strategy should be, how to manage the change that comes with that, which is significant for larger organizations. And finally, the last piece is really a horizontal that we apply to all of our projects around data management, business intelligence, AI type, IoT integration, which is also a very rapidly growing part of our business, but also essential, especially in digital transformation projects. We're also very fortunate, given what we just went through as a pandemic, whether by choice, by design, a bit of both. All of the sectors we are involved in are part of essential services. So in the first 2 quarters during COVID, our fiscal year starts April 1st, we've actually seen some growth in the company year over year in those 6 months of the pandemic, the first 6 months of the pandemic. Because our customers are growing and they have to live through the pandemic, and we've had to support them. And the cloud projects are accelerating at many of these customers as well. So we believe we have the right sectors to focus on. From a technology perspective, interesting follow-up to Tim and Mike's presentation. Given our vision is to be a trusted advisor for our customers, we believe we need to be able to accompany them in more than one technology. So today, if you look at it from an enterprise business perspective, we are in the inner circle at Microsoft, so which means that in Microsoft, we are the top integrators on the ERP and CRM side in certain verticals, in this case, manufacturing. So we are in the top 1% at Microsoft, the inner circle that they call. We've won many prizes as being one of their top providers And again, this is for the business application side. Same thing on the Oracle front. And again, this is Microsoft Cloud and Oracle Cloud we're talking about. We are also in the top 1% of Oracle in certain very specific sectors, and that's how we differentiate. So for example, we're the #1 in healthcare today for Oracle ERP and HCM in the US. Finally, we know that many of our customers looking to migrate to the cloud need help. Given our scale today, as I was mentioning, with the 2,300 people, it gives us a lot of leverage with some of these key providers who are now coming to us to be able to be a partner to them. Given our presence in Canada and our growing presence in the US, it gives us a great negotiating power with many of these providers who want us as a partner. We want them, they also want us. So it's very useful in negotiating these agreements and working with our customers when we can bring these partners to the table. And when you're a key partner of these organizations, as Mike was saying, it comes with all kinds of benefits, whether it's training benefits, marketing credits, joint marketing efforts, and so on and so forth. So we've been able to leverage that, and our scale has enabled us to do it even more. We were very transparent when we went public, just 2 years ago, November, with our 3 to 5 year plan. And one of the reasons we went public was to be able to execute this plan. And we talked about organic growth of higher value business and acquisitions that I'm going to talk about in a second. We also talked about how we're going to foster a culture of ownership and attract and retain people. We know that the biggest challenge in our industry is attracting and retaining talent, especially in a business like ours, where we're more in the higher value type services. We're not a staffing company. Therefore, our people come work for us because of the cool projects. We have to be able to hang on to them and retain them. So we've put many programs in place. One is our Leadership Academy. Every stats that you looked at, people leave their leaders before they leave the company. So we believe that if we have the best leaders, we're going to attract and retain the best people. We work very hard at that. We put a share purchase plan in place for our employees to foster the ownership mentality. And we've done a lot around employee well-being and taking care of employees. As an example, 100% of our people work from home since before the government asked us to do so. So back in March, before everything kind of fell apart, our people have been set and working from home, and we're implementing ERP solutions remotely for customers, and it's been working very well. Finally, on the investor side, we've also said that we want to make sure that this long-term growth that we're doing is going to be profitable growth. So we're very disciplined in our acquisitions and the type of work that we go after. And of course, we are trying to do this in a responsible way. So if you look at kind of track record of acquisitions since going public in 2018, and I could talk about the ones before, but I specifically like to address the last 3 that we've done, which are very recent. I'll start with Mattresses, which was an IoT type organization. So we saw an opportunity because of the sectors that we're in. We saw a huge demand from our customers into integrating more of their on-floor type systems, the operational systems, into the back office and the ERP front. So this was a very useful acquisition for us. And again, we've been able to generate growth in that business since they've joined us. The next one we did was Traversant, which was a Dallas-based Oracle Cloud ERP delivery experts in healthcare. And again, a great example of the leverage that we get from these acquisitions is that on their own, they were very good. They were seen as #1, but because of their size and scale, they couldn't go after the bigger projects, or if they did, they had to subcontract to somebody else. Now, instead of being a 50-person organization, they come to the customer as a 2,200-person organization. And because of that, we've been able to win some very large projects in healthcare, which we could not have won alone, and they could not have won alone. We actually announced those deals a few months ago. One was with Nemours. Some others were with some very large Canadian cities on the municipal side. Esquita was the last acquisition that we've done that specialized in QA and automated testing. So this actually brought us some IP which we did not have before, which we can use to expand the services that we do within our customers. So most of our customers are very large organizations, blue chip type organizations. We do very little work with small organizations. So what we see as the biggest value, coming back to our vision as being a trusted advisor, is the relationship that we've been able to create with our customers. Once we have that relationship, we work with the customer to figure out what else can we bring to the table. Testing was one of the things that was identified by our customers as something that they not only needed, but is essential to every transformation project. We've also used this internally on ourselves as we've implemented our own cloud ERP solution internally to be able to support our growth and integrating these new acquisitions. Give you an idea, anybody who's done an ERP cloud implementation, beauty of cloud is you're always up to date. Challenge of cloud is you need to be up to date. So every quarter, our customers get push updates from these providers, whether it's Oracle or Microsoft and so on. They have to retest every time. This puts a big burden on the operational teams and the organizations to retest these upgrades every time they come. We've been able to automate that. So we've done it for ourselves internally now, and this is something that we're reselling to our customers because of what we got with these acquisitions. So we really look for the acquisitions that not only are we going to help them grow, but we believe that together we could grow a lot faster. I'm just going to leave on one financial slide. This is our growth rate has been significant over the past few years. We've seen a slowdown in COVID, even though we did have some growth in COVID. Coming back to our EBITDA of the last 6 months, so the first 2 quarters during COVID. And we've commented on this publicly, so this is not new information. But I just like to leave on that. Coming back to the third bullet that I was talking about earlier in our strategic plan. When COVID started, we were very clear with our people, with the street, that we saw 3 very important priorities during the crisis. One was to protect our customers, protect our people, and protect the company. We saw a slowdown in some of the project startups, which, if it were a normal situation, given we have very flexible workforce, you can adjust up and down very easily in terms of how many people you need for projects. We typically have a pretty long lead time. We can adjust up or down in normal fashion. So during COVID, we cut every expense that was deemed non-essential. And one thing that we deemed essential was hanging on to our consultants for projects that we knew were just being delayed. So we know that had an impact on our EBITDA and a bit on our gross margins because we had more people available not billing for a period. We're very happy we made that decision. I think the value of what a company like ours has to provide to our customers is directly tied to our workforce. So we invested some money in the last quarter to make sure we hung on to our top performers and our best people. And we're very confident that's going to pay off in the medium and long term for us. That's it in a nutshell. Amr, Rob, on to the next one.